Welcome, everybody, and thank you for coming this afternoon. I'm Christine Osborne, Vice President of Bald Head Island Association Board of Directors. We're very pleased to host today's meeting to discuss insurance-related issues that we know our property owner members are dealing with. In addition to our experts giving us general perspective on what's happening with insurance in our state, they've agreed to answer specific questions from our property owners. We've received a number of questions from them in the last few days that the panel will address during our time together today. Let me introduce our expert panel, several of whom are also Bald Head Island property owners. Bob Kiger is a retired property and casualty insurance executive and is our moderator for today. Bob and his wife Bonnie have been Bald Head Island owners for 20 years, and we're grateful for his expertise. We have two representatives from the North Carolina Department of Insurance here to help us learn some of the ins and outs of insurance in North Carolina. Marcia Kelly is the Coastal Southwest Regional Director, and Tim Crawley is a consumer complaint analyst. Marcia is a friend of Bald Head Island, and she has often been one of the first to call with an offer to help when we faced a disaster. And thank you, Tim, for traveling from Raleigh today. And we have Chad Honeycut with the Honeycut Group, along with his associate, Brett Lascara. Jonathan Peel of Coastline Insurance are both property owners and here today, with a perspective both from the insurance company and also a homeowner. I'm so looking forward to a great session today with all of this knowledge in one room, and we appreciate you all coming and joining us. Before we get started, please indulge me with passing on a couple of logistical items. We have several people here in the room, and others are joining us remotely. For those in the room, there will be a time after presentations when you'll have a chance to ask the experts specific questions. When it's your turn, please come to the podium, ask your question, so those online can also hear. Please tell us your name and your Bald Head Island street address. For those online during today's session, you may raise your hand by clicking on the hand at the bottom of your screen. This will put you in the queue. After our panel answers questions from those in the room, we'll turn to you online. When it's your turn, you'll be asked to unmute yourself, and then you can ask your question. Today's session is being recorded and will be made available on the BHA's YouTube channel 24 hours after the session. You'll also find the video and the slides on the special page on the BHA Bald Head Association's website at baldheadassociation.com. You can find the link to that page on the right side of the homepage. Thanks again to everyone for coming. Bob?
Thank you, Christine. My name is Bob Kiger. Been a resident here for quite some time, and as she said, retired from insurance. I've worked in companies, I've worked in agencies, I've worked in agency clusters, worked for direct writers, for reciprocal exchanges, pretty much all the various types of insurance business that you can imagine, and maybe some that you couldn't imagine. I think one of the things I've always wanted and tried to do, and I'm going to take a few minutes here before anybody, I'll stop. My wife is here. She will give me a cutoff if I get too wordy. But insurance mostly is a very boring topic and one that most people just really don't want to deal with. So I first thought it would be instructive to kind of outline some of the processes that you go through. And I think as a consumer, if you really understand the process that each of these entities, the insurance department, the agents, companies go through, I think it will help you and aid in your securing the insurance, being able to ask the right questions, being able to kind of ferret out what goes on. So I'll just have a few facts, and then we'll open it up to the panel here to kind of give you a brief description of what they do and their role in this. Insurance, first off, is the only business I know of that requires a company to figure out how much they're going to charge before they know what their costs are. You know, if you're building a chair, you know how much the wood costs, you know how much the glue costs, how much the screws cost, all that stuff, and you can figure out how to price it pretty well. But insurance, you're guessing at how many claims you're going to have, and you're guessing at what cost they will have to be settled for. And it's a wide range. So therefore, you're going to find an industry whose profits are going to vary widely from year to year. And that makes it difficult. I will give you one example. When I worked at Geico, I was there at a time when Hurricane Andrew happened. And at the time, it was an enormous storm. It was the worst one that's ever happened. A little while after that, Warren Buffett, who was still trying to buy the company at the time, came to one of our officers' meetings and stood up in front of all the officers of the company and said, let me see if I get this straight. You've been in the homeowners business, Geico, for 35 years, and this hurricane wiped out the accumulated profits over 35 years in your homeowners business. So if I had invested $1 in your business 35 years ago, I'd have $1 today. Well, everyone in the room kind of looked dumb and looked at each other and said, oh my gosh, he's right. And if you kind of ever followed the history of the company, you'll know that it wasn't too long after that that Geico sold their homeowners business. It's not a coincidence that that also kind of helped their stability and their affordability and availability. So I'm not really here to defend the insurance companies, even though I just hope they stay solvent so my pension check clears the bank. But I want to explain a little bit about how they go about setting rates. They look at the history of claims that they've had in various perils. They try their best, I guess, in most cases, to make an estimate of how much it's going to cost. And then there's this other little thing at the end of the year that people never talk about. It's called IBNR, incurred but not reported, which are all those claims that no one has reported to the insurance company, and they try to put money aside for that. And they try to satisfy their shareholders. They try to satisfy the marketplace so that they don't overcharge and lose customers. And basically they guess how many claims they're going to have at what cost. And then at the end of the year, they add up all that stuff, and perhaps sometimes they make a profit, sometimes they don't. But it's over the long run that they have to be stable and be able to pay claims and do all the things that we expect of them. So it's really pretty difficult. The trend, however, and we're here mostly to talk about homeowners insurance, the trend, I would say, in the last 10 or 15 years has been, and we've all seen it, you watch the evening news, there are fires, there are hurricanes, there are earthquakes, there are all sorts of windstorms, there's floods, there's all this stuff. And it's not getting any better. It's getting worse and worse. And the frequency and severity of those storms is increasing, and which leads to the inevitable conclusion about what's going to happen. Can I get that slide, please? So this is a risk and vulnerability study done by the National Association, a National Oceanic and Atmospheric Administration. It compares what they think are the risk and vulnerability of the United States compared to North Carolina, compared to Brunswick County. And I would first draw your attention to the one that says severe storm. That's a categorization of any kind of storm. And you can see that we're probably about twice the risk. Well, that's pretty risky. We have about twice the risk and vulnerability that they do in the United States, a little bit higher than North Carolina. But the next one.
The numbers, I'm sorry, I can't read it.
You can, oh, okay. So for the United States, the number is 16.99. For North Carolina, it's 21.42. And for Brunswick County, it's 30.02. The next one is probably the most important. This is tropical cyclone. These are hurricanes. 4.36 for the United States, 14.91 for North Carolina, and 24.6 for Brunswick County. So we're what, about 6 times as vulnerable and 6 times the risk as the United States, and almost twice as much as South Carolina. You'll see wildfires, which is probably the most enormous, but we don't have a lot of wildfires here, but we've had a fire recently in the last year or so that, as a result of living in the maritime forest, was complicated and certainly proved to be a mess. Even though it wasn't a wildfire, it was an electrical short that started it, but it's a vulnerable area. So this just gives you an idea that we live, you know, when you live on an island, that's an X on a hurricane map, with the threat of rising sea levels, the expectation is it is not going to get much better. I wish I had better news, but don't set your expectations thinking that this is a temporary problem. It's just going to get worse and worse and worse over the years. The economic losses, in fact, have increased about sevenfold since 1970 to like 2010. That is the economic losses that insurance companies have sustained. So the companies do their best to guess what's going on with rates and costs. And then the insurance department is here, and they have an extraordinarily difficult job because they have to be sure that the insurance companies are solvent and they have enough money to pay the claims when necessary. At the same time, they're on the sword because they also have to balance that against their responsibility for the consumer. They don't want insurance companies overcharging, and they have to balance that act. So when you see things like, I think recently there was a submission for HO2 from the rating bureau for 42% increase. Well, last year, I think it was like they submitted 28 or 30 and they got 6 or 7. And that's the balancing act that the insurance department does to kind of call balls and strikes on the insurance company to make sure that the trends are not overstated. But remember, at the same time, they still have to allow the companies to have sufficient funds to be able to operate and remain solvent. Otherwise, it'll all end up on Tim's desk because then there'll be lots of complaints. And when there's not sufficient money to pay the claims, then the insurance companies have to pony up. So that's one difficult job. The next difficult job is the agent. The agents are contract salespeople for companies. That's their job. But you as a customer, me as a customer, we're not only a policyholder and have an agreement with the company, they're also our friend because we're their customer as well. So the agent now has to balance the issues of availability, affordability, our desire to have low-cost insurance, which we don't worry about the coverage until the claim happens. And then we say, why didn't you give me more insurance? So they have the other part of the knife edge that has to balance between their customer in the agency and their responsibility to the company. So what you have is an industry that's built on 3 knife edges. And I don't know of too many other businesses that have that kind of, I don't know, I wouldn't call it flexibility, that kind of issues that have to be addressed at every level. Which is why she hasn't given me the sign yet, so that means I have a few more minutes. That's why I've tried to, whenever I have interactions with people, is to try to help them understand how this industry operates so that they can be better prepared when they talk to the agent or talk to the company or learn about insurance. Homeowners has been exceptionally tough because of all the weather-related and climate-related stuff. In the old days, a homeowner's policy was what was called a named peril. You get your policy, the policy would specify exactly what the coverages were that they would cover, and that was it. Then as a matter of competition, more companies wanted more business. It went to what's called basically an all-risk policy, which means we're going to insure you for everything out there except what we're not going to insure you. So the best advice I would give anybody now is whenever you look at your insurance policy, the first thing to look at is go to the exclusion section, because that's probably the most important. Because more coverages over the years, as they become unmanageable or unprofitable, have been stripped from the policy. Flood insurance is a perfect example. Mold, sinkhole coverage. I mean, there are all sorts of things out there that have been excluded in an attempt by the insurance company to be sure that they remain profitable. So while you don't have to read the whole policy, which is really boring, do please go to the exclusion section and read that. Because if there are certain coverages that you don't want to be financially responsible for, make sure you do that and figure out what you have to sustain or what risk you're willing to take on your own. Okay. Oh, and then the last point. I seem like a doomsday messenger, but I've been in this business for 40 some years, and this issue of homeowners insurance has gotten worse and worse and worse and more difficult and tougher and more expensive and all the bad things that you can even say about it. We were all sitting out today having lunch, and I think everyone agreed, while the timing may be off, our fear is that there's going to come a time in the not too distant future where wind insurance is going to go the way of flood insurance, and there's going to have to be a national program likely, because no company is going to want to sustain the losses or the uncertainty of trying to price for that product. And it could very well be, whether it's 10 years or 20 years or 30 years, the likelihood of wind insurance going the way of flood insurance is probably something we're all going to see. But in the meantime, I would say, if you begin to understand the process and you know the relationships of the company, the department, the agents, who are all kind of jointly responsible for helping you secure the right coverage. It's not just about, I mean, I can't tell you the number of times when I worked in an agency where people just wanted their coverage lowered without regard to, or their premium lowered, excuse me, without regard to the coverage. So be very careful when you do that. That is not a good trade-off. I understand the expense. I understand all those issues, but just be very cautious about just wanting to reduce your costs by reducing your coverage. Because when the claim comes, that's when everything hits the fan and you'll wish you had had that coverage. And I think that's about it. That's probably all for the start. So our first group was going to be from the insurance department. So I will turn it over to you all.
All right. Thank you, Bob. My name is Tim Crawley. My role at the department is called a consumer complaint analyst. So if any of you've had to file a complaint with us, there's a good chance I may have seen it. I think I was the fire that happened here a while back. I think I saw that one come across my desk. But, to Bob's point about insurance, the Department of Insurance kind of has to weigh the checks and balances when all these rate requests are put in by the rate bureau. The commissioner and his staff have to look at that, see, what is going to be the best option for the consumers in the state of North Carolina. We want to ensure ultimately that there's a robust amount of companies available to write home policies in North Carolina. So that's why there's a lot of give and take. And year after year, you'll see where, industry is requesting to take rate increases on home and auto policies. And that's just because in our current environment right now, the cost of living on everything is going up. So you have any other to add? No. Well, let's see if I can get this clicker to work. I was going to try to. I'll have to stand on one leg and hold my tongue out. There we go. So basically here, one general question for the audience. Have you read your home insurance policy? And do you understand it? Because that's, it's written in Greek to be read in Latin, basically. It does not make sense to most people. But you have four main type of homeowners forms that are utilized here in the county, and specifically for coastal North Carolina, more for inland, not here for Bald Head Island. You've got mobile homes. The MHF is a mobile home fire. The other one is MHC, that's comprehensive. The dwelling policies, you may see those as If you have a seasonal or secondary home here on the island, the DP1, DP2, and DP3, they're kind of the different tiers, kind of good, better, best. The DP3 is kind of the top of that. And then after you get past that, that's where a company would consider writing you on the HO3 special form. That's what you mainly see for your traditional, detached home here in North Carolina. The HE7 is something that's been added in the last couple of years. It's an enhanced form. So that gives you some higher levels, limit levels than you would have in the HO3 policy. Like I was saying about the dwelling policies, the DP1, known as the basic, and the DP2, known as the broad, are named peril policies. They're not comprehensive. So understand that even though they may have lower premiums, they may not give you the coverages that you need. The DP1 or DP3 is a special. That's where Bob was referring to as an open perils. So that's where they will kind of open up the door to cover more stuff unless it is specifically excluded in that section of the DP3 policy. Like I said, they're typically used for vacation, seasonal, secondary, rental, or older risk. You'll see like maybe if you have an older home built in the 1910s, 1920s, or stuff like that. My mother-in-law would refer to those as a fire trap, and those are usually the kind of policy that you would write one of those under. There is no loss on those for no coverage for loss to wind-driven rain. And we would advise that you consult with your agent for your best coverage for that particular risk. The Homeowners 3, which is kind of the bread and butter policy for most, freestanding homes. On that, I would stress that you make sure you have the replacement cost endorsement added on there. Most of your agents are going to, realize that that is something you would need, but just look at the policy and make sure that that's one of the endorsements on your policy. A named peril policy. So if the loss or portion of the loss is not covered by one of the named perils, the policy contract has to exclude it. There's no coverage for loss due to flooding. I'm sure everybody here is well versed with flooding and the need for that. The adage is if you live where it rains, you need to consider flood. I live in Raleigh. I don't live near any body of water, but when we had Hurricane Florence come through, I had 6 inches of standing water in my track-built Pulte home that's built on a slab. So I had to go around to the front door and the back door and sop up water at the door sill. I never thought I would need that in Raleigh. I mean, I'm, miles from a body of water, a creek or lake or anything like that. Yes, ma'am.
Okay, so if it says no coverage, for example, loss due to wind-driven rain, so we can add that stuff, correct? These are just what's normal on the main.
Yeah, in this policy, you're not going to find any language that gives you coverage for wind-driven rain. You have to look into the policy. In North Carolina, there's an endorsement that's added. It's called the special provisions. And that's where you'd have to look in there and see because wind-driven rain kind of falls under, water. So it's grouped with tidal flooding and all kinds of weird, different, waterborne kind of perils. But really the core of it is that you have to have a weather event cause an opening in the roof or a wall of the home for it to be considered. So if you get a hurricane, it drives a piece of, broken tree, shrapnel, and punctures a hole in your wall and comes into the house. That's your opening. So that's where they're going to rule that, okay, that's wind-driven rain coming through a hole that's been created in there. Or if you can look up at your ceiling and you can see daylight or moonlight through there where it's ripped the roof surface away.
But before we get into too much detail, could we please save the questions to the end? So jot it down or let everybody get through their presentation first, please, because we do have a list of questions. I'm sorry, okay.
Yes. And I know, and also coverage for mold, in that HO3, it's capped at $5,000. But the caveat is that it has to be caused by a covered peril on the policy. So you can't just say, you know, hey, I had a guy come in to remodel my home and he opened up the wall and there's all kinds of mold. You need to verify that that mold was caused by a covered peril in the policy.
Is there a storm coming? Okay.
Probably, yeah.
Yeah.
And then with your coverage A dwelling amount, that's important to look at because that's the amount that the insurance company is saying your home is going to cost to rebuild. I think here on the island, you're in a little different dynamic than maybe somebody that lives in Supply or Winnebago or in Whiteville. Your cost per square foot is going to be significantly higher. So you need to, you know, you can do the simple math on that, say my home is X number of square feet and divide into that and make sure that you've got enough money to pay for that. I think you're saying it's around 600, 650 here on Bald Head Island per square foot. So, you know, just be sure to check that, you know, when that policy is issued. And that's something where you can, you know, you could get a home estimate done by a professional and bring that to the company. I had to do that myself recently on my home insurance. I noticed that mine was a little bit lower than what I thought it should be. And when we did the math on it, right now in Raleigh, my home's area is 200 per square foot to rebuild. And the company had me at 146. So I was already in the hole. So I questioned that, had to do some additional stuff and got my coverages raised.
And we'll talk about that more specifically a little bit later. There's a big issue involved with this, and we'll get to that in some of the questions.
And I do mention this, there's an endorsement you look at, the HO 3220. That gives like an additional 25%. If you have a, you know, catastrophic loss at the home, it gives you another 25% of your coverage A amount that you can tap into to make repairs or rebuild your home. And then this is kind of for your benefit. These are some endorsements that I thought were, you know, especially relevant here for you on Bald Head Island. The wind, storm, or hail percentage deductible, and that's the form number. Don't just assume that you have $1,000 deductible. Sometimes these, that percentage, it could be 1%, it could be 2%, or it could be 5%. When you factor that against your coverage A amount, that could be sticker shock to you when you have a claim. The specified additional amount of insurance for coverage A dwelling, that's the one where I was on the previous slide where I was mentioning it kind of take you above that 100% amount to tap into additional funds to rebuild or repair. The home sharing host activities endorsement. So if you utilize Verbo or Airbnb or something to rent out your property, you may need to look at something like that. The named storm percentage deductible is of relevance here. And then down at the bottom, the personal property replacement cost loss settlement. I see a lot in post hurricane claims where the adjustment of the home is pretty much cut and dry. You know, they can eventually figure out the numbers and get to that number and get it. What I see consistently where the claims process bogs down is personal property. The company does not care what you say you have. They care what you can prove you have. So use this. This is your best tool. You know, luckily with hurricanes, when they come, we know well in advance they're coming. So go ahead, take pictures of your policy. You know, have contact information for your agent. Take pictures, go around the house and your property and take pictures of your valuables. You know, after a storm, I would want a bed to sleep in, a chair to sit in, and a TV to watch so I can figure out what's going on in the world. You know, things like your toothbrush, hand towels, that's incidental. The big things are what you're really going to want to document. On a best case scenario, you would have invoices or receipts for those purchases. If you do, take pictures of those. Those invoices and stuff will fade over time. You can take pictures of it and save it in a cloud, and then you have all that documentation, kind of your hurricane packet there in a cloud that you can retrieve and help to, facilitate things in the claims process.
And I will add too, in that area, don't wait until there's a hurricane coming to do your home inventory. It's important for you to do your own home inventory whenever you can, as soon as you can. Keeping it so that whenever you make those pictures, whether you do it on your phone or however you do it, make sure there's a date that shows somewhere on those pictures that you're making, that it says when you made those photos. But I do suggest don't wait until there's a hurricane coming, because your emotions are gonna be high then, and you may not think of something that you might think of when you're in a lessened height of emotion. So just think about that early on before the storm's bearing down.
Yeah, because most of us are going to grab our phone, our cash, our keys, medicine. In my case, the family Bible and the dog. That's part of my responsibility too. And then this, the Homeowners Enhanced policy, that does things a little more broadly on an open peril basis. I believe there are some exclusionary language in there, so that's why Bob was saying it's very important to go in and look at that exclusion section. The main part of the policy is where the Lord giveth, the exclusions where the Lord taketh away. You'll see that more to the peril of water, where they really tighten it and exclude things. That HE7 provides a guaranteed replacement cost, or the actual cost to replace the dwelling. You'll get higher limits of coverage for things like money, securities. I group jewelry, firearms, and silverware together because that's by the peril of theft. And then higher limits for tree removal. I think that's a sticking point here on the island because you're in a conservancy, so you can't really go and mess around with too much of the landscaping. The deductible waiver, if the loss is over $50,000, there may be language in there that they waive your deductible. And then food spoilage after a hurricane is important. So if you have this policy, you would get it up to a $500 coverage with no deductible. On the traditional, the HO3 policy, if you filed a claim for food spoilage, you may have a deductible apply. So if you've got $500 of coverage, but you have a $100 deductible, how's that really benefiting you? And then this is
Before you move on to this one, if I could
click back.
This is kind of in the vein of really understanding what's out there. And it's something that I hear very little discussion about. There's a group, an independent group that's separate from all insurance companies out there called ISO. It's the Insurance Service Organization. This is a company that creates policy documents, policy forms that have this numbering system. They create these for the specific purpose of selling them to insurance companies who cannot afford their own legal staff or their own internal staff to develop their own endorsements. So not every company uses ISO forms. So one of the things you probably really want to understand about your policy is that the company who's writing your insurance, are they an ISO affiliated company or a company, say like Allstate or State Farm or Progressive, where they have enough resources to develop their own forms? Now, they're very similar to these, but they're not the same. Those kind of companies may offer a little bit broader coverage or different coverage or something like that, but just be aware of whether the insurance company that you're using is an ISO affiliated company or not. I don't know what they are offhand, but generally it has to do with the resources of the company, like the ones you see advertised on TV for the most part. But that's an important distinction, because what ISO does is put together these endorsements so that they've covered all these other situations that have been problematic over the years or been excluded from policies, and they're buyback endorsements. And they may be similar to the ones I said that you have on your company, but just be sure you understand that there are two tracks for coverages and how they're listed in your policy. I'm sorry.
Oh, that's fine. And then this, I wanted to bring this form up too. This is what's called the HS3. This is like the homeowner wind and hail form that you would see typically being sold by the coastal beach plan, the North Carolina Insurance Underwriting Association. This policy does have language in it, which I've put in here. It's on page 6, perils insured against, coverage A, dwelling in B, direct physical loss. This is where they actually do have language to include wind-driven rain. So if you've got the hurricane beating down on you and it's coming around the window sills, you know, under the door sill and all that kind of stuff, this does afford coverage for that. So this is the one that I found that does provide that. Because you think about it, you know, when, especially when Florence, that thing just sat here and lingered and we had sustained winds. It was blowing water up under your window sills and all that. On a traditional home policy, that's not really going to consider, you know, to cover that unless your window got broken and it was pouring through your window. Oh, go back here. Oh, sorry, go back one. And I wanted to add this to golf carts are vital importance here on Bald Head Island. This is primary means of communication or transportation, I should say. With your, you know, for physical damage coverage, you know, with a home policy, they're going to have a section in there talking about motor vehicle liability. And it basically has that in there to say, well, you know, we're not going to cover your car or your pickup truck or whatnot on that. That's why you need to get an auto policy. But the home policy will afford liability coverage for a golf cart. And it's got specific criteria and all that. So if you're driving it around on the island, you probably need to consider getting some sort of collision, some sort of first party coverage. You know, if some tourist is here on a bicycle and they dart in front of you and you run over them, then, you know, or you try to swerve and drive into the bay and mess up your vehicle, you're going to need some coverage for your vehicle. And, you know, there's kind of, I'm not sure how they all are on here. I'm sure people have kind of bare bones, Yamaha, and then tricked out easy goes with lifts and lights and all that. But basically the rule of thumb is if the golf cart is licensed for road use, registered with the DMV, does it have tags, lights, turn signals? If so, you may need to obtain physical damage coverage through your personal auto policy using this endorsement, which is the NC 0323. If it's just for use at the residence premise, or if you're just using it to drive from your house, drive over to the golf course and play your round of golf, you may need to endorse that through your home policy. And that would be the HO 0528. That's called the Owned Motorized Golf Cart Physical Loss Coverage Endorsement. So these are two where they're giving you first party coverage for damage to your golf cart. The plain home policy is just going to give you liability coverage. And these are kind of popping up now. Low speed vehicles and modified utility vehicles. I know recently when I was vacationing over at Oak Island, I got passed by a guy in some blue dune buggy looking thing that was a Polaris product. Last time I saw one, I was out at Troy at a Warri Forest on the off-road trails. He was driving that thing on the street. He had lights, tags, the whole 9 yards. I was going 40 miles per hour and he left me in the dust. So he was driving a modified utility vehicle. The low speed vehicles, I think here on Bald Head, you may have people that have kind of moved up from, say, a golf cart to what they're calling a gym product. They're, you know, kind of like the Rolls Royce of golf carts. Those would be considered more of a low speed vehicle. So, you know, that's where I would direct you to your agent. If you have one of those gyms, to see what would be the best kind of coverage option for you for that kind of vehicle. They're typically going to cost more than a traditional Yamaha or E-Z-GO golf cart. And then last but not least, flood insurance. So the main caveat for that is that we at the Department of Insurance have no regulatory authority over flood insurance. That is a federally underwritten program. We get a lot of people that call after events to talk about that, and we have to refer folks back to the flood insurance program through FEMA. The commissioner has requested from industry to kind of come up with an alternative, a private flood product. And the only one that a record that I can mention to you is written through a company called Incline Casualty. So that's, you know, an option other than going through the flood insurance program through FEMA. floodnc.gov is a valuable resource for you as a resident. I personally use it when we start having storms coming in the area, whether they're coming from the mountains to the Piedmont or if they're coming from here to the Piedmont. You can go through that site and you can actually get real-time Doppler radar of the weather throughout the entire state. You can zoom in, you can pan out. It's got readings for the different water level, like monitoring stations along the different waterways, be it the Cape Fear or, you know, Snow's Cut Inlet or whatnot. You can look on there and see, is this stuff trending upwards or is it maintaining or is it going down? And then again, just consult with your local agent for assistance with the flood policy. I think that was all we had. Okay.
Okay, I just wonder.
May I add
just-
one
oh,
really quick thing, just really quick. And this came from a personal experience I had with a dear friend of mine. They had a second home on Oak Island and their home in near Raleigh, and moved down to Oak Island permanently, and did not know. And this is partially on them, but also partially on the agent for not, you know, verifying. But they didn't know they needed to change their coverage when they moved into their home on Oak Island permanently. So make sure that if you leave a permanent home and you move down here and you're in your Bald Head Island home permanently, make sure that you have the right coverage. Make sure you talk to your agent and make sure that they know that you are here permanently and that you're not in that home as a second home now. Very important. Unfortunately, they lost everything. So it was a bad situation and they didn't know about it until they went to file their claim.
And before we move on to Jonathan, I just want to give a reminder to our online folks. If you have a question now, go ahead and click on raise your hand and enter that question, and we will get to it when we work through all the questions at the conclusion. Jonathan, Coastline Insurance.
Yes, so my name is Jonathan Pill. I'm the owner of Coastline Insurance Associates, located in Southport and Oak Island and Riceville Beach and Wilmington. I've been in this area almost 20 years writing insurance, and was blessed enough about 7 years ago to buy a house over here. In fact, the fire that Bob referred to, it was 130 feet away from my house. My house is in Lighthouse Landing, and we had just finished a renovation project. And I was for sure that was my house. Just knew my contractor or electrician didn't ground something, but luckily it wasn't. But glad to be here, and thanks for having me. Did you want me to?
If there's anything else that you want to say, please do, or, you know, make notes of anything that you heard up to this point that you want to expand on.
Sure. One in particular, I think you did a good job giving the overview of the homeowners insurance, but if you look at the homeowners policies that I've seen on the island, I'd caution you to get liability coverage under your homeowners insurance. If you read that language, it says it provides liability coverage if you're playing golf or if you're using the cart that is unregistered and on private roadways. Neither apply to Bald Head Island. Bald Head Island roads are considered public, and as you all know, you get stickers to register your cart every year. So I think you would find yourself in a bad situation if you were being sued for a golf cart accident and your adjuster said, well, wait a second, we're not going to pay this claim because this is a registered cart on a public road. So I would caution you with that. I haven't seen a policy that would give that coverage. There could be companies out there that offer endorsements. I haven't seen any that write at Bald Head Island that are doing that. And then the other thing I would like to say is that wind-driven rain is and was a huge topic after Hurricane Florence. Many clients were left holding the bag paying for this wind-driven rain damage. And unfortunately, there are a lot of national insurance carriers that don't have a product for Bald Head Island residents. So what they do is they go to the market of last resort, which is through the North Carolina Insurance Underwriting Association. And that market of last resort is typically written on the dwelling fire policy, Form 2. That Form 2 only covers named hazards, which, as Bob said, if it's not named, it's not covered. And although that form says we cover wind, it doesn't specifically say wind-driven rain. So if you didn't have a hole in your house, you had no coverage. So it's real easy to identify. If your homeowner's policy starts with the letter D, you are probably on that form. So that's the best advice I can give you, is to check your policy number. And if it starts with D, there's a good chance you probably don't have wind-driven rain coverage. Those were the two things that really stuck out to me.
That was, just for anybody who didn't hear, that's D as in damn, I don't have coverage. Anything else?
I think that's really what stuck out to me.
Chad, you're on.
Thanks for having me. My name is Chad Honeycut, and I'm the owner of the Honeycut Group Insurance Agency. We're based out of Wilmington. My family and I, we bought a home here shortly after the Florence storm. So, it's one of those things where you think you think you know the amount of damage you're going to need to fix, and it ends up being 3 times the cost. But we love it here. So, obviously, we took a very big interest in just the insurance knowledge around the island since that storm, and obviously we have a vested interest in that. So we're invested in the overall health of the island from an economic standpoint as well as from an insurance standpoint. Brett Lascara is with me today. He's one of my new business writers in the office, and he sees these policies 100 times a day, far more than I do. So I want to make sure he was there. He was here to answer any very, very specific information on those policies. Along with everything that Jonathan said, I echo that. Those were a couple of notes that I had made as well. One other thing, we were talking about the ISO forms. If a carrier didn't have the financial wherewithal to completely rewrite a policy, what we have seen is that they will use the ISO forms, but at the back of your policy will be another section that tells you all the things that they've just changed about the ISO form. So that's also something that you just need to be aware of. So I think everything that we've said today just really points you back to making sure you have a good relationship and open communication with your agents more than anything. So, Brett, anything else?
I've looked over the questions that we're going to kind of be going over today, and a lot of what I want to talk about is going to be answered in these questions. And hopefully I can also maybe provide some positive spins to what I've seen in the industry over the last couple of months, and maybe a lot of the negatives that we are talking about here today. Maybe I can help offer some positives that I'm also seeing.
Okay, we'll get to the questions. We have, they're not numbered, but I have some bulleted questions that were submitted beforehand. I'll simply read the question, and then anybody who feels like compelled to answer or can't wait, go for it. First question is it mandatory to have hail and wind insurance through the North Carolina joint underwriting?
Yeah, I can step in there. So the answer is no. So us as independent agents, we have relationships with a number of different insurance carriers. Historically on the island, that number has been higher than it is today. So historically, we've had relationships with a lot of different companies who are willing to write wind and hail business on the island, whether that be a homeowner's policy that includes wind and hail, or a wind and hail only product that would compete with the North Carolina underwriters. Over the last 5 or 6 years especially, many of those companies have lost their desire to write wind and hail. So they're either getting off the risk completely, or increasing their premiums to make it so it's not worth purchasing. So many people are purchasing their wind and hail at this point from a purely cost standpoint with North Carolina insurance underwriters. But the answer is no. There are plenty of other options that are out there. Right now, there are probably no options that are going to be as competitively priced and competitive coverage as that. But we hope that the industry continues to allow competitive companies to come in and maybe take some of the strain off North Carolina so that we can maybe see some competition and help lower those rates.
And I think there's another angle to that question as well is, do the homeowner insurance companies require you carry wind at all? So you may want to self-insure against wind coverage. And unfortunately, as agents, the carriers that we represent, they all want to see that you have wind coverage. And in fact, we usually have to send them proof of insurance after we write it. And technically, North Carolina, when they have their HO3 form, wind is a standard hazard, just like fire insurance. So the equivalent of someone at the coast saying, I don't want to carry wind insurance would be equivalent to someone in Charlotte saying they didn't want to carry fire insurance. The insurance agent can't exclude fire. That is a standard form in the policy. So I think there's another angle of that question as well. So hopefully we got it answered between the two of us.
Yeah, Chad, you mentioned that there was an increase in the availability of coverage on wind.
That's correct. Just very recently, the North Carolina Insurance Underwriter Association just increased their maximum coverage up to $1 million for residential homes. That actually goes into effect, I think it was November 2nd.
Great.
So that's,
That can preclude a lot of excess wind insurance for some people here, perhaps.
Yeah, and so that's a definite positive that I was going to mention is that will help relieve your premium, because right now, if you need more than 750,000 in coverage, those excess policies are, they're fairly safe policies for the insurance company, but they're priced, fairly high right now. And for $1 million house, it is much less expensive now, or it will be starting on November 2nd, to insure that full $1 million with North Carolina versus the first 750 plus an excess. A couple $100 at least is what we're seeing in cost savings for that.
You had a question, go ahead.
Just.
Could you can come up here to ask it so the people at home, the viewers at home can hear you.
Sorry, I'm just particularly.
No, that's quite all right. This way the people online can hear you.
G'day, people online. This wind and hail thing is kind of particularly interesting as well, because it's still a little personal. So on the North Carolina piece, all right, so we still have from Florence an outstanding claim, all right, close to $1 million, where we were offered 12, then we're offered 350. We're now in a situation with umpires and all the rest of it. But because we have an outstanding claim for a new purchase, we're unable to get insurance. So the question comes in relationship to this under the wind and hail. What is in fact available? What are the rights of the companies to refuse insurance as opposed to accepting insurance? I think we ended up working through, with USAA. We went through you guys, I think, for a couple of years after Florence on our place through Lloyd's of London rather than North Carolina. But we've now got a new house that we're constructing, and the whole question about whether we're even able to get wind and hail insurance.
Yeah.
All right. And when you've got a $2 million plus property, what are the options that you have when we're sitting here on this island? So it's kind of I hate to bore everybody with a personal piece, but it kind of gets to a real question around what is available to us. Because if it's not available, given the way things are going, we're just going to pack up our bags and go back to Australia, mate.
Yeah. So
Sorry, is that all right? No, it's quite nice.
I think you're concerned if they're offering higher coverage to everybody, why are some companies declining from writing my policy just because I have an open claim? And the companies outside of the North Carolina Underwriters Association, they typically do have a lot more restrictions on claim activity. And that's something that us as agents are not a fan of. You know, open claims is something that more or less can get you, you know, blacklisted from purchasing insurance with a lot of companies. I think that that's, you know, ridiculous, and we let our companies know that. And then claim, you know, the amount of claims that you've had in the past can also make you, you know, more or less uninsurable with certain companies. And then claim severity can also make you uninsurable with certain companies. So, you know, the best part about living in North Carolina is that we do have that North Carolina Underwriters Association, which is typically, what's that? Well, we can definitely debate that. But you know, they're considered the market of last resort, you know, for the people who can't purchase insurance elsewhere. Normally, we have the negotiating power to still make sure that you can obtain insurance when, you know, we can help document that you're being excluded by other companies because of an open claim. So, you know, they can become our friend in your situation. So, you know, I do think that you will get insurance, especially since Hurricane Florence, you know, has been, you know, 5 years now. But yes, you know, it's something that we wish that these other insurance companies didn't put you on this uninsured list. Unfortunately, you know, we're not gaining much traction with that, but we are definitely pushing that with all companies.
And I would say you mentioned, you know, what's out there available, what's the availability for $2 million in insurance? I believe, was that your question as well? One of them. So hopefully with the increase in the coverage amounts with the joint underwriters and the insurance underwriters to 1 million, there is a smaller need to buy the excess. But if you needed the 2 million, the 1 million with the IUA and a 1 million excess policy is an option. Or there are carriers that would go up to, say, you know, 1.5 million, and then we could buy the rest in excess. So there are options out there. And I wish I could speak more directly to your individual situation involving the claim. And obviously we don't have all those details, but as the need to insure homes for a higher value is there today, higher obviously than it's ever been, so is the need for insurance companies to catch up to that. The valuations and the cost of construction and the valuation of these homes that we're trying to insure, unfortunately, has outpaced the insurance market being able to keep up with that at this point. So that 1.5 and over, it's challenging for us, to be honest.
Yeah, I mean, you're probably an early victim of the increasing issues surrounding climate change, surrounding insurability, affordability, availability, all that. But, as I said, I don't want to be the harbinger of doom, but it's getting worse and worse and worse. And all the things that cause all these storm issues and causes all the damage are just not going to get any better. I mean, it's going to be a tough situation, and I'm sorry that it hit you first. Yeah.
I can't get insurance in my own person.
Yeah. One of the issues that I think ends up being somewhat of a consideration is how much risk are you or we as consumers willing to take? If a mortgage company, if you have a mortgage on your house, they're going to require certain coverages and certain coverages be met, and you have to do that. If you don't have a mortgage, you have some options. You may or may not want to have all that same level of insurance. It could be, as I don't know, Chad or Brett said, or I can't remember Jonathan who said it, but it could be the insurance company wants you to have that as well. But you can exchange, you could put premiums, enormous premiums away in an account somewhere to start to build up over the years. I mean, if you haven't had a claim in 4 or 5 years and you're putting away thousands of dollars of insurance each year in a separate account, that will help mitigate some of the issues. And maybe you just want to retain that risk yourself or some portion of it. And you have more options if you don't have a mortgage than if you do. If you have a mortgage, you're stuck. People aren't going to lend you money with your house being collateral if they're not going to insure it, or you're not going to insure it to what they think you ought to have in order to get you the money. So the options are probably going to diminish. And I think there's going to be more issues where we have to, as consumers, take on risk ourselves and assume that risk, unfortunately.
Can I ask that? Can I add something to you? too?
Sure, please.
For the gentleman, if you are. Absolutely. Have you contacted the DOI about the issues that you're having? Have you filed a complaint with us about the issues you're having with your carrier? Okay, will you see us afterwards? We can put you in touch with the folks. Okay,
I would remind everybody up here on these tables are your friend. No, I mean, they're the people you need to go to if you have an issue, because their job is to help us all out in these kind of situations. So, but yes.
How long does it take for the fact that he made a claim 5 years ago not to be held against him?
Yeah, that's,
When,
I'm not qualified to answer that.
when
one, sorry.
companies are underwriting, they're using, the information from the application that the agent submits. But on the back end, after the policy's bound, you have a discovery period where the company does additional, or should be doing additional, underwriting of the risk. One of the things that they use, you talk about being on the naughty list, there's a report, it's called the CLUE report, the Comprehensive Loss Underwriting Exchange. And that basically is taking your own information and presenting the company with any claim activity you have made. With a home, it's also picking up any previous or past claim activities for that home, for the property address itself. So most companies, they're going to assess insurance claim, point. They're going to charge you for that for 3 years from that date of occurrence. They may still keep it on the books and keep it in your file for 5 years. But after 3 years, they should not be assessing you any kind of adverse points for that claim on your home policy.
And I'd
Auto
like to add,
policy is kind of similar too. That 3 years kind of the magic number.
I'd also like to add too, there's a big difference in having an open claim and having past claims. A lot of carriers don't want you to switch insurance from one company A to company B while company A still has an open claim, because they just don't know exactly how that's going to end up. So that's a big point. If the claim is still open, carriers can get a little, uneasy about that, future carriers. The other thing with the claims is most carriers will handle or look at catastrophic claims like a Florence claim, and they don't hold that necessarily against you like they would if you had just filed 3 or 4 water claims because your ice maker kept breaking or your washing machine hose leaked and that sort of thing. That can kind of create an insurance score for you that's not very appetizing for a lot of carriers. But if it's a claim from a catastrophic event like Florence or a hurricane or some other named storms situation, they won't necessarily hold that against you because that was an act of God. It's there, it'll show up on the activity, but it doesn't necessarily prevent your future or have, as big of an impact on your future insurability.
That's a good point. Yeah. And I failed in my responsibilities. If you have a question, you can just please come around here, because I forgot that people back there. So if you have a question, could you please come up to the mic? Sorry.
It's a quick question for the clarification about the North Carolina insurance underwriter. We have a home that's valued significantly above $1 million. We have wind and storm with a very nice 2% deductible. And we get insurance and they raise it every year, but we get it and they paid claims brilliantly. So that underwriter association is a last resort, and we shouldn't be going there for the first 1 million and trying to get our additional coverage from our current company. Is that correct?
It's always an option. I mean, if your current company is offering you wind and hail coverage up to your replacement cost of your home, then and you're you have a good relationship with them and you're happy with that premium that you're paying?
Happy, no, but
I use that term very generously.
it's only gone up 20% in the last year.
It's a
Yeah,
great rate of return.
the term last resort has lost its meaning. North Carolina underwriters is now almost the only resort for a lot of things. So historically, the term is last resort. However, over the last few years, it's become, one of the more competitive and best resorts. So we call it that, but it's actually turned the definition into better.
But I mean, I don't know if my company would be willing to give me the layer above $1 million.
So there are
Or how much I would save by having a double layer policy.
Yeah.
right now, for the most part on the island, the most cost effective way is to layer it into 2, maybe 3 policies. One being, homeowners, one being the amount of wind and hail that's available, and then the third being the excess wind and hail.
But I get it all from one company.
Right. And so in the last,
Who also has my other home, my cars, my liability, my art.
yeah. And that's great that the number of companies willing to do that are dwindling. And so, the way that we insure homes on the island, the best year to year, it changes. 3 to 5 years ago, the way that you're referencing was the best way to do it. It's more rare that that's the best way to do it.
But if I get it, would you advise I should just stick with it? Rather
More
than
than
try to.
likely at this point, that'd probably be a good option. What you could do is ask your current carriers, what would my homeowner's policy cost if you excluded the wind coverage? And then you could price out the wind coverage separately and then compare the two, and you may elect to just stay right where you are.
Yeah, I think you're gonna have to compare your coverage limit and also the deductible. And then at the end, let's look at the price and see what makes sense. I always say, start with coverage first, then look at your deductible, and then let's look at the price. Unfortunately, the consumers are looking at price first, and sometimes that's not the best.
I'm not happy with the deductible, but I can live with it. Okay, thank you.
I'll put on a partial company hat for this too. Not knowing about the predictability of the future. And I think there was this one of Fiedler's rules of forecasting. And the moment you forecast something, you're going to be wrong. You just don't know by how much and when. At this point, you don't know what's going to happen in the future of insurance. If you change your underlying coverage right now from the wind or whatever from your current company, that in all other aspects, it sounds like you're satisfied with, it may be tougher to go back to them and get that coverage in the future if things look like they're getting worse. So while it's not maybe the best solution, I would certainly consider staying where you are, using the underwriting association, which is likely going to have to be there for North Carolina for a long, long time. And wait until you really need to do that. The 2% wind deductible, that's not uncommon. That's kind of a good one. You'll see 3, 5, and even higher wind deductible percentages. But especially if you're satisfied with the claims experience that you had, that's worth a lot. Okay, the next question. Why has my insurance gone up over 30%? See, 20% is not that bad. From last year with no claims against any policy. I'm not going to burden anybody at the table with this because they're not part of the company. So this sounds like one I'm going to have to take on. Insurance is not individually rated in general. There are rating characteristics that apply to certain classes of business, credit score, accidents, violations, history, all that stuff. But it probably went up 30% because the company's prediction about what's going to happen to claims in the future merited that increase. And perhaps they didn't have enough money in the past to pay for all those. And, the rates have to be, depending on the state, I've forgotten this. North Carolina file and use or use and file? Prior approval? Prior approval? Mm-hmm. Yeah, states have different rating processes. One is called prior approval, where the company has to submit the rate, state examines it, finds out whether or not it's sufficient or meets all their characteristics, all their qualifications, and then they're allowed to use it. Some states have what's called file and use, where the company just files the rate, they start using it. At some point, the insurance department will examine that rate, and if they found that it was an overestimate, they'll claw the money back from the insurance company. And there's others that are used and filed. So same thing, only it's slightly in reverse, but that's the way the rates get approved state by state, and it's done state by state.
Bob, I get that question every day, more than once every day. And I mean, the short answer is look to your coverage A amount. If you see what that is at your renewal versus what it was at the previous term, that's usually where you can see that fluctuation in the amount of the dwelling. So that's usually the main driving factor of it. In North Carolina, we have an entity called the North Carolina Rate Bureau. They're the ones that, they lobby on behalf of the insurance companies. They're the ones that submit these rate increase requests to the Department of Insurance. Outside of that, the companies can come to the department and they can request a specific rate filing. So they could say, hey, because of this, that, or the other, for us to remain solvent, we need to take maybe, 4% and charge more than what the base rate is that's established by the North Carolina Rate Bureau. That's called the deviations. It is statutory within Chapter 58. So that's, there's a lot of that going on in the background. And it, like Bob said, it depends on the company. Some companies may be doing better than others. We maybe see where some companies are coming to the table more and more, asking for a little more. But that coverage A amount, if you look at that, that's usually going to be the main component of that year-to-year premium increase. Because if you think about it, I mean, if you've been here 20 years, how much did your home cost when you got it then versus what it is now? Well, yeah, you'd love to reduce your rate, your coverage A amount and get lower premium. Do you want them to tack that same number on that MLS form when they go to sell it? So that's kind of the other edge of the coin there.
In much the same way as we talked about the ISO form filing for those insurance, the Rate Bureau has pretty much the same responsibility. That's a company. It's an independent group that files rates, and companies that can't afford actuarial departments or can't afford to analyze their own rates might use the Rate Bureau, and they may or may not file for a deviation off of that. So they take that rate and they say, I think we can get away with 10% or less. So they'll take the Rate Bureau's rate filing and they'll say, we'll add 10% deviation. So those are our filed rates. And some of the smaller companies probably will use that if they can't afford to have an actuarial department to actually process their own trend and their own history and make their own forecasts.
And Bob, the homeowners rates are filed with the North Carolina Rate Bureau. They do set the rate that I like to call the ceiling, but insurance companies are legally allowed to charge over 250% above that rate.
Good point. Thank you. Yeah.
And I did prepare for that question. If I can take just a second about the 30% rate increase.
Please.
I'm
sorry.
ready for that question.
I just wanted to
Stop
take
it.
you guys off the hook.
I actually thought that was the most important question. I don't know who it came from, but it probably is the reason a lot of people are here. And there's one thing that you didn't talk about. I wish you would have, because I'm going to have to explain it. But the problem that's in the industry right now that's driving rates is what's called reinsurance. Every insurance company has to buy catastrophic reinsurance. To give you an example, this is insurance for insurance companies. And that reinsurance market, most of them are located in Europe and Bermuda. That is an unregulated rate. The North Carolina Department of Insurance does not set reinsurance rates. And the way reinsurance works, and I'll use round numbers, but let's say an insurance company has $50 million in cash to pay out claims. The big storm hits, they wake up one day and they have $150 million in claims. Where do they get that extra $100 million that they file a claim on their reinsurance? And right now, reinsurance rates are skyrocketing. It's called, a lot of experts are saying this is a once in a generation event where you had top or record-breaking catastrophic losses in connection with high spikes in inflation. Those two things are profitability killers for insurance companies. In fact, one of the largest reinsurers, Swiss Re, just published in an insurance magazine that property losses for homeowners has increased 36% year over year. So when you see a 30% rate increase, they might be generous because it should be 36% is what they're seeing. The other thing that I wanted to point out that's really driving this instability with reinsurance is we're hearing about hurricanes like Hurricane Ian, Hurricane Ida. Those are breaking records as costliest storms ever hit the US. In fact, NOAA, you can go on their website and they have the costliest storms that ever hit the US adjusted for inflation. And what is very interesting is in the last 10 years, 7 of those storms that have hit in the last 10 years are in the top 10 list over the last 10 years. So basically what I'm saying is in the last decade, we've had 7 of the largest storms to ever hit the US as far as costs go. What's really interesting, what I really think started this smoking gun, out of that top 10 list is Hurricane Harvey, Hurricane Irma, and Hurricane Maria. They're all in the top 10 list. They all hit in the same year, 2017.
2017 was the worst year in total payout for the
And
insurance
if
company.
you add up those 3 storms in that one year, they will far exceed Hurricane Katrina, which is the #1 costliest storm to ever hit the US. So I really think what's going on is much bigger than us or the insurance companies or the Department of Insurance. It's the reinsurance markets that are finding this instability. The good news is in this article, they are starting to see it stabilize. And I think we got positive news this year so far. We're not through hurricane season. But I do think we're going to see stability in rates. I don't think you're going to see 30% rate increases every year.
I'll knock on this laminated wood for you.
So that was my homework.
Thank you. And that reinsurance piece was very, very important. Thank you. Okay, next question. This might go back to you too. Do you foresee difficulty obtaining coverage for golf carts in the future? Do you know why companies are no longer writing? Is it because of renters?
Marcia and I actually had this conversation. Here's the issue with golf carts. Let's just talk about liability coverage for golf carts or auto insurance. In North Carolina, liability coverage is required by law if you have a licensed vehicle on the road. So therefore, insurance companies have to provide liability coverage. So there is a facility, it's called the North Carolina Reinsurance Facility. If the insurance company doesn't want the risk, let's say you have 3 DUIs, they have to write it. They can't turn you down. So what they do is they actually write it, but they place it with, it's called a ceded risk, and it goes to the reinsurance facility, meaning if a claim occurs, the money's coming from the state reinsurance pool instead of that actual insurance company. The biggest problem we have on Bald Head Island is they don't have license plates. Therefore, they cannot participate in the North Carolina facility, which means the insurance companies, when they pay a claim, they have to pay it out of their pocket. It's called a voluntary risk. The problem that we've seen on Bald Head Island is population growth, high-speed motors, people driving intoxicated, and probably the cost of the helicopter ride. So insurance companies are paying out maximum limits around $100,000 or $250,000, and they were only charging $200 a year for the premium. So what I'm very fearful of is if these claims keep occurring, why would an insurance company voluntarily take that risk for $200 a year? So I am worried about that. I would love for us to go ahead and be proactive on this and see if there's some way that Bald Head Island, through the current registration process, can become a part of the reinsurance facility so that these companies have to provide coverage and the claim can come out of the reinsurance money.
And while there's always a challenge for how the village spends money, I would certainly endorse any of you, especially the people who live here, to encourage the village government to be sure that public safety is kind of suitably staffed to help police and do this. I know there's issues. You don't want to make it, you don't want to get people upset. You don't want to get the renters upset, but here's something that the village can actually do with funds and enhancing public safety's ability to kind of keep track of these things and mitigate it as much as possible. Excuse me. Okay, thank you. I would like to know how much homeowners to carry per square foot to rebuild on this island. What is the average price for wind and hail insurance? Do most people get this? I would like to start out with one thing and then I'll open it up to you guys to answer. When I was still growing up in the business, there were multiple tools that were available to companies to evaluate what the construction costs were of your house. Lots of them. Over the years, they have melded into one or two nationally. Some companies, again, the ones that have the resources, can afford to devise their own algorithm with respect to trying to understand construction costs. One thing I would pass along for the department people to take back is this island is more expensive than the typical algorithms lead you to believe. I've even had this problem with my own insurance company where I wanted to raise the coverage and they wouldn't let me. I mean, I'm offering to pay them more money. And as they said at lunch, maybe they thought I was a moral risk or something else, but it's a real issue about making sure that the companies recognize that the building costs here are not the same. You know, they're all defined by zip code. And this is a small part of the zip code that happens on the mainland. But you got barge costs, you got all sorts of other costs that are attended to building here. Not to mention the fact that it takes a lot longer to do that. So anything that you guys could do to kind of bring that notion up. And over the years, we've made several offers to come visit with you guys, and we would be glad to sit down with you all and talk to you about some of the issues and give you some of those live examples. So any help you could give us there would be greatly appreciated. Anybody else want to?
Yeah, I'll speak to that just for a minute. You know, trying to decide exactly the replacement cost of a home, which is really what this question is about, is a very individual situation. You could be next door neighbors and one house could be $500 a foot replacement cost and the house next door could be $750. So it is a very individualized equation that we're trying to put together. But just for the purposes of this meeting, I would say that the builders that we work with that build along the coastline of the Carolinas and specifically here on Bald Head, they start out around $600 a foot. And they go probably up, you know, close to $1,000 a foot. But again,
That's just for the home, not including the land, right?
That's correct. That is
Okay.
just the
Yeah,
home
I'm sorry.
itself.
I just wanted to make sure.
Yeah, make sure. Yeah. So that, again, that could be, you know, a builder's grade home could be $600 to $700 a foot, and something that's got very detailed craftsmanship, a lot of high-end appliances, you know, hardwood floors from Africa, you know, wherever it can get very extravagant. That's a very individualized process. But on the island, it is the most expensive area that we deal with regards to replacement costs. So whether that's Riceville Beach and Figure 8, which we're very active in as well, Bald Head is right up there with them. And it has a lot to do with the access to it, get the building materials and the labor force and everyone over here to do the work. But if you've already got your home and you're not even considering building a home, it's still an equation that you need to work through yourself, because if you did have a catastrophic loss and found yourself with a total loss and having to rebuild your home, our job as agents is to make sure that we've put together a policy that would rebuild your home at today's cost.
And something
Great advice.
And
I'm
something
sorry.
else to consider in those building costs, and you know, there's no magic formula. My first question when I get asked that is, well, when's your loss going to be? Second question, who's your builder going to be? It's really hard. It's really hard to determine that. But you know, with rebuilding costs and when it comes to insurance, there are some costs that you wouldn't incur. For example, you don't have to cut down trees anymore. You don't have to put in a driveway usually. So there are some costs that may bring that down on a rebuild cost for insurance purposes. But like Chad said, I really think that I've seen homes at $850 a square foot being built. So it's very tough, and I do think it's very individualized for each house.
And the result, of course, is going to be if it's insufficiently insured when the claim happens and you have a total loss, you're stuck. I mean, you have automatically assumed whatever the balance of that risk is.
And I want to make one last point about, we were talking about the additional 25% rider that policies have now, which basically says, we'll give you an additional 25% over top of what your policy limit states. There's a large misconception with that coverage within both the agent side of things, which is not good, and especially to the client, is a lot of people will think that we can underinsure our house by 25% and then rely on this coverage to be properly insured. And I know it's funny, we laugh, but that is what a lot of agents actually will tell people, and they might not put it in that exact language, but hey, well, we can get away with $300 a square foot because we have this additional 25% on top. Unfortunately, the insurance companies are not going to see it that way. So, the goal when you write the policy is to be 100% replacement cost. Let's say we have that bad storm and building costs go up overnight. That's what that additional 25% rider is designed for. It's midterm changes that, we don't want to sit here 6 months into our policy and say, hey, we probably need an extra 1% because building costs went up last night. So I would rather overinsure your house by 25% and not include that endorsement than, what a lot of people may do is underinsure their house and then rely on that endorsement. And that endorsement, although it is great and a lot of mortgage companies likes to see it, it's actually fairly difficult to use and get paid. That endorsement only gets paid after rebuilding is done. And so it may be forgotten. But just overall, one of the main misconceptions is that we're relying on our 25% to make sure we're insured properly. You need to be insured to 100% when you write the policy.
One element of caution, I apologize, you're much more of an insurance expert on this than I am, is there's something called co-insurance. So if your house isn't sufficiently, if your loss isn't sufficiently equal, there could be less coverage than you think. So most insurance companies, when they use their algorithm, like you to be in like a plus or minus is still 10% range or so. Or is it
that particular endorsement, if you're not insured at least 80%,
80%,
you're not eligible for the endorsement.
Right. Okay. So anyway, I had backwards. I said it backwards. I'm sorry. I knew what I said.
Yeah.
Okay.
Another big thing with that particular endorsement, because so many people do rely on it, there is, and what's really common now are people are renovating their home, and there's a verbiage in the policy that says if you increase your home's value by 5% or more, you have just without letting the insurance company know or increasing your coverage, you have just voided your extended replacement costs.
And one other coverage nuance on that, there's this coverage called appurtenant structures, which are things that are on your property that are not attached to your house. And that's usually a standard 10% of the value of your dwelling coverage on your house. I ran into this with our own insurance company because we have a 2-car garage with a huge crofter over top of it. And it will cost more to rebuild than the 10% coverage would allow. So just be sure if you've got any of those kinds of situations that you get the proper coverage on that. And you can do that by endorsement. You can increase the limit on that. I think it's coverage B, right? Coverage B. You can increase the limit on that. Cost you money again, but then, it gives you the coverage you want. Okay. Who writes flood policies now? You're going to go to the federal government.
Yeah,
I wouldn't, there may be other options, but
there's some decent private, for the most part, Bald Head has reasonable flood rates compared to other places. And, FEMA's recent changes in 2021 have helped keep the rates as low as they can be. I think overall flood insurance rates are not a problem on the island. And there are some private options that we use pretty heavily over here that are even less expensive than FEMA's rates. But overall, I don't think it's a huge concern for flood rates over here on the island.
Biggest thing with the flood insurance that we see in higher net worth markets like Bald Head is that the $250,000 that's provided from the NFIP is just not enough. And so if you do want more coverage than the $250,000, we either need to look at excess or going into the private flood market and buying a flood policy that matches the limits that you desire.
Okay, the next question, I'm not sure how to answer it. I'll make a first attempt and you guys can chime in. You, not guys, that's a picture, you people, I didn't mean to. Can chime in. It says, what are the best insurance options? I'm not exactly sure what that means, but I can tell you two that I can think of. Make sure that you are adequately covered and make sure that you have read the exclusions in your policy. Those are the best options that I can find. The only kind of corollary to that is do some research on the best rating, financial strength of the company that you're involved with, because there's a whole rating system out there. I would say there's 3 or 4. I might put more faith in an AM Best rating than some of the other ratings, insurance ratings that are out there, but they kind of look at the financial strength. It's no guarantee, but they do run some pretty interesting and decent financial tests of strength of insurance companies, and it's worth looking at them. And they rate from A++. I don't even know if there are any companies left at A++ anymore. Maybe a few.
Not on the coast.
AIG was right when I got built
Not
up.
on the coast.
No, certainly not. I think Auto Owners was one, Geico might have been one. I think State Farm is A+ or A, and you really want to avoid, if you can, and you may not have the opportunity to do, when you get down into the B- and C range, you've got some troubled insurance companies. So just recognize that that's just one part of the solution. That's all.
Also recognizing that the difference between a admitted carrier and a non-admitted carrier.
Good
I
point.
think that's an important thing to consider as well.
You want to explain the difference?
Em, you can probably explain it better than I
Well,
can.
like, I guess best example locally for a non-admitted would be Lloyd's. They're an insurance syndicate. So they're not an insurance they're not a mutual or a stock like some of the other companies. The problem with that is if you have a claim through them, you're not going to be afforded any protection through the North Carolina Insurance Guarantee Association. So if you had your home through Erie, USA, whoever, and you had a catastrophic loss and something happened to that company, they just were like, okay, we're insolvent now. You would have some protection for your claim through what we call the NCIGA. Those excess and surplus carriers, Lloyd's, being probably the biggest one on the coast here, you're not going to have that kind of peace of mind.
Is that limit still 300,000?
Yep, 300.
I believe it's changing to 500,000.
Yeah, we had a new,
Oh,
I
okay.
think it was Senate Bill 452 that there's language in that to increase that 300,000 through the guarantee up to $500,000.
It hasn't been approved yet.
Yeah,
It has not been approved.
What does that mean? The insurance company goes under?
If you're in like for people here on the coast, if you had like Lighthouse or United Property and Casualty, they've been declared insolvent. So any claims, outstanding claims that insureds have, they're being handled by the Insurance Guarantee Association. So that's where they have that, cap of 300,000 on those claims. So if you have a $1 million home here, you're already in the hole because you can only recoup 300,000 through that. But I think most, those two companies in particular, hopefully most people have placed coverage through other means and have their homes insured now.
That was a good point. Thank you both. We have been hearing a lot about the inability to insure homes on Bald Head Island built before 1990. Can you please expand on this? Why is this an issue now? And what could be done for buyers, sellers of homes built before 1990? If a major renovation has been done since 1990, would that help in getting insured?
Well, this is coming about because one of the bigger writers of insurance on the island, they have changed their underwriting guideline where they don't want to insure a home if it were built in the decade of 1980. The music was great in my opinion, but homes were not. Yeah, it really stems from.
Best of the sixties.
Yeah. In the eighties, they were using some plumbing pipes, polybutylene being one of the popular ones that failed, and there was a big class action lawsuit. This individual company has decided that they've had a lot of water losses, and it's pointing to homes built in the 1980s. So they have just set a hard underwriting guideline that if the home's built in the 1980 decade, they don't want it. And it's a problem over here because they are a big writer here. And I just fought one the other day that I lost on, and I hate losing a fight, but this house had been added on to, almost rebuilt in 2018. And I took it to underwriting. I got the building inspector to send me the building permit to show everything that was done. And the response from the underwriter was, if the tax records will update their year built to 2016, we will then insure the home. And the tax office, to my knowledge right now, is not going to do that. So it is a problem, but this carrier that I know Brett and I are using a lot of, Markel Insurance, it's the 1980 homes, and really where it's getting difficult to find coverage is if your home replacement cost is between 1 million and 1.5 million. If it's under 1 million, we have other carriers. And if it's over 1.5 million, Markel wouldn't write it anyway. So we would have to go to another option.
Okay. Do you want to add anything?
Yeah, I mean, it stems from water damage. It doesn't really stem from anything related to wind. These policies are typically only between $1,000 and $2,000 per year. It's the homeowners excluding wind and hail policy. Things like fire, water damage, et cetera. Those premiums, $1,500 premium and there's a $60,000 water loss. Especially the plumbing that was done around that time. It's very common. So you can see pretty easily that that's a losing venture for the insurance company. Unfortunately they're putting a pretty hard stance on that and not willing to even consider it if the house has been gutted. We still have plenty of options, but like Jonathan said, that was definitely one of our most competitive options for houses here, which there are a lot of houses here that were built in the 80s. And so, we're going to the next best option for those houses and taking things by case scenario.
One corollary to that, if you do not have metal hoses to your washing machine, go out and get them today.
What?
Metal hoses for your washing machine. Go out and get them today. That's probably the #1 cause of flood damage or water damage, I guess, in homes. Those old plastic hoses, get rid of them, get them a set of metal hoses.
Ice makers too. We see a lot of ice makers. Very small.
Copper line instead of the plastic,
There's
right?
a very small plastic hose
Right,
behind
good
most
point, yeah.
refrigerators.
Okay, we are relying on blank to find replacement coverage. Is there anything else we can do? I don't know exactly what that means, but I'm sure it's an agent or some name in there, but
My best advice is always try to use a local agent.
Yeah.
Because they're the ones that live here. They specialize in these areas, and I think that's your best option is.
and the local agents here will have the markets available that will be necessary to do this. Trying to find somebody in Raleigh or Charlotte who knows about stuff like this is not your best bet. You must have, and we have 2 great agencies here. I never met them before today, but I assure you, just listening to what they're saying, these are 2 very responsible, great agencies that are here. Stick to something local for that, and not rely on something else. If you have a question, I'd ask you to come up, please. I'm sorry. They withhold my paycheck if I don't do that.
That was actually my question, but we're a commercial group and we've had our property canceled. And we've got 30 days to find and so we're working closely with Jonathan. I guess my question would be, are there just fewer agencies to cover us now? I mean, getting down, we're gone from 20 we've used historically to two.
Yeah, I think that's been kind of what's going on this year is that we used to have a lot of options of carriers that would write here, and that is slowly dwindling. Luckily, we still have the NCIUA, the North Carolina Insurance Underwriting Association, that will provide what I would call the catastrophic risk. If, they cover fire, if it burns down, they cover wind, not wind-driven rain, which is getting even harder to find on commercial. But yeah, I'd love to talk to you afterwards and tell you where we're at with your case. Yeah. I might have good news though.
Okay. Y'all want to add anything?
Yeah, I mean, I think, it's much harder, it's much broader, for other things that we can do, but it has to do with legislation and encouraging, competition and, just allowing other companies, maybe incentives to come into the state of North Carolina to write insurance. I think it would be great if there was a promotion for an insurance company to come in and purchase a portion of the North Carolina underwriter's book to alleviate some of the stress off of them. And that's just going to happen with, legislation in the Department of Insurance and voting.
Okay, next question. How might I reduce the cost of excess wind insurance? My premiums have increased significantly in the last 2 years.
Well, hopefully that gets, with the NCIUA making the increase to $1 million in coverage, hopefully that takes a bite out of, someone needing that excess coverage. Unfortunately, if you're still needing, $500 or $1 million more, you're still in the market for needing excess coverage, but they did increase it by $250,000. So hopefully that eliminates the need for a lot of folks.
My insurance company is demanding that tree limbs and even trees be removed from my house with the threat of cancellation. How can I find a balance between having appropriate coverage and still keeping Bald Head Island's natural environment intact?
So we've had a lot of success working closely with the actual underwriters. And what I have done is I've sent the underwriters the Bald Head Island ordinance when it comes to tree trimming and pruning. And really the biggest concern with most carriers is they do not want tree branches touching any part of the house. So you may have to if you have branches on your roof or touching the siding, they just want those trimmed back. And in a lot of cases, the limbs are small enough that they won't require a permit.
Yeah, the company's concern for that is that space between your roof and the heavens. If you've got any part of the tree hanging over that, they're going to look at the worst case scenario and say, well, what happens when that limb breaks and crashes through the roof? So that's from the company side, that's their main concern. Like Jonathan said, if you've got an agent that can have that dialogue with the underwriter, because, there can be some give and take. I mean, the underwriter's job is to, price to risk. So they should hopefully have some discretionary authority there to say, these are people that are multi-line. They've been with us a long time and they've got this kind of dynamic for this association that they live in. Maybe we can just kind of relax our position on that.
In addition to just the limb falling, if the branches grow, the wind blows, it's going to scrape across the shingles. And if you've got asbestos shingles, it's going to wear them out. And it's probably going to increase the likelihood of a leak, water damage, and another claim.
Yeah, the only thing I was going to add too is a lot of times when those inspectors come out to do the homeowners coverage inspections, and they submit their reports and they recommend tree trimming, it goes into an underwriter. They have no idea that you're on Bald Head Island. They just don't know, how precious the trees are and how serious we take these issues. And so just contact your agent. Just like Jonathan said, we've had a couple situations where we've submitted the ordinances and showed them, this is a big deal, what you're asking. And again, all they really want to do is make sure nothing's touching the home or encroaching over the roof line, the gutters, and that sort of thing.
I think it's one that requires extensive conversation among various parties. Yeah.
Like Chad said, sometimes with the photos that are submitted to the underwriter, you can't tell if the limb's touching or not. So you may not even have to trim the limbs. It may just be good to take a picture showing there's clear space and send that into. So.
Right. That's a good point. Okay. Let's see. Do you foresee other types of carriers no longer writing on Bald Head Island, property/fire?
Yes.
Yes, I agree. Yeah,
Yeah.
unfortunately, I don't know any other way around it. I mean,
Either they no longer write here or they continue to make constraints on their underwriting process and they
Yeah.
make it more and more difficult. Or instead of sending you a non-renewal letter, they send you a premium and you tell them to shove off. Yeah, one way or the other.
yeah, right.
Unfortunately, I don't know of an insurance company that wants to be the market leader on Bald Head Island.
Right.
It's a hard place. Insurance is all about spreading risk. And when you have a small island, it is very tough to spread the risk.
But going back to, all of it being talked to a local agent is that we do have the knowledge of what market is currently accepting business, what new market may have just came in. I actually spoke with an underwriter yesterday who said that they have a newly acquired large amount of aggregate, which means that they're basically said, here's, $200 million worth of premium that you can go write at your discretion. And so there are opportunities like that constantly come in as one goes out. So having an agent who's privy to what insurance companies are currently writing here is your best friend.
And picking up on what Jonathan said about reinsurance, one of the requirements of companies to get reinsurance on their own is they have to present what their risk tolerance is in certain areas for certain coverages. And a lot of times the reinsurance company will place a restriction on the amount of premium an insurance company can write in a certain geographic area in order for the insurance company to be able to get their reinsurance. So if they keep writing business and premiums keep going up, you're going to hit this cap. So what you'll see is this erratic behavior from time to time, and it's unfortunate. It really falls more to the agent's shoulders than anybody else. The company will say, we're stopping writing. And a lot of times they'll stop it because they can't get the reinsurance, or they really just are going to not do it. But, they don't want to give up that business because that's giving up revenue. So they're trying to at least keep their revenue stable and trying to meet their shareholders' responsibilities or expectations. So it works in a couple of different ways when we see insurance availability cut off. Will rates go down once companies get their settlement money from recent events? No. Rates are not going down. The day of price reductions on homeowners insurance are gone, I'm afraid. You might see an occasional reduction of automobile insurance, but that's unlikely. What's more likely to happen is if they have several successful years, the rates will stay the same. They might not ask for a rate increase, or as the insurance departments examine them, they'll say, you don't really need a rate increase. You're doing fine. That's fine. But I don't think we're going to see insurance rates go down. Please, my paycheck is at stake again.
Okay, so this is very subjective for obvious reasons once you hear the question, but I'd like to ask the two companies what your general view is. But here, let me just give you the context before the question. There's a lot of debate going on right now in California about what is driving insurance companies out of the state. And the rates are regulated by the state. And many insurance companies are saying that the California government is so tough that they will not allow the companies to price for the risk. And so they are withdrawing from the market. Now, obviously the risk out there is fire, not hurricane, but in a way it's irrelevant. So my question is, with all these people withdrawing from Bald Head, I assume they're also withdrawing from other coastal areas in North Carolina. Is there a sentiment that the state is being too tough for some of these companies, or is it something, just the fact that the risk is obviously higher? There are more homes to insure. Unfortunately, the increasing population of homes and rebuilding along the coastal areas increases the risk in aggregate. So my question is, are you seeing any signs of that happening in North Carolina? What may or may not be happening in California, because obviously the government of California is disputing these things, but it's very clear that a lot of major insurance companies, we're not talking about small time parties here. You're talking about major countrywide insurance companies withdrawing from the California market. Thank you.
Yeah, I'll just real quick, to my knowledge, in the last decade, I can only think of one company that left the state entirely. Majority of what they do is just reduce the coastal exposure, anything east of I-95. That for whatever reason, that seems to be the line that they draw on the proverbial sand. So it is, I have the reduction in the coast. Unfortunately, I see that continuing personally. I don't think that we're looking out a few years and having, twice as many carriers in a few years as we do today. That market could continue to stay hard and continue to get harder. However, to my knowledge, I don't know that they're completely leaving the state of North Carolina for those reasons, but I do think it's more, they're just not confident. They're not comfortable with the rates that they're allowed to charge and the exposures that, compared to the exposure they feel like they have along the coastline.
I'll give you a real life example. When I worked at Geico started there in 1973. In 1975 or 6, they nearly went bankrupt. While this doesn't relate to homeowners, I think it will illustrate kind of the company's thinking about relationships between companies and insurance departments and an insurance environment. There was a coverage in New Jersey, happened to be Geico's largest state for policyholders at that time. Amazingly enough, New Jersey had a coverage for uninsured motorist coverage where the coverage was unlimited. However much money it costs to settle a claim, that's what you paid. Now, I don't know how you price for a product that has no coverage limit on it. And the company was losing $1 million a day, and the chairman had to go up there and ask about that. And he had the license in his pocket and pulled the license out of his pocket and said, then we quit. There are lots of litigious states. There are lots of kind of adversarial states out there in terms of their insurance department. This is not one of them. Which is good news for all of us here, but there are states, and California is among them, and they look to install coverage requirements that just are so extraordinary they can't be met. There's no way to insure them, and that's what happens. And as I said, our environment here it's not that way. I've been in a region where we've worked with the North Carolina Insurance Department, and we are fortunate to have a good insurance department, well managed, well administered. And it varies state by state. Insurance companies gave up in order to get out of McCarran Ferguson and monopolies. They changed everything, and that's all subject to state regulation. It's tougher for them, but you kind of now have 50 different departments that you have to work with rather than a national program. But I feel very comfortable about the insurance department and that environment here. You still may see we just heard that it's going to get tougher, but I don't foresee major insurance companies just stopping writing here. The wind coverage is probably going to be the issue, but I don't see them backing out of anything else.
Yeah, and we still have the North Carolina Underwriters Association. So if all of them did, eventually leave, we still should have that option no matter what.
Yeah. Did you want anything, Chad? Or?
No.
Okay. All right. How to make sure I have the right coverage at the most reasonable cost?
Speak to your agent.
There you
Talk
go.
to your agent.
Yeah, talk to a local agent that knows the building cost.
Yeah.
Start with the coverage first, look at the cost last. We try to represent as many carriers as we can that are competitive here. Start with coverage first, use someone local that knows the area.
And reasonable is not necessarily in the eye of the beholder. So it's a relative term. Are there any additional rule changes coming down the line that we should be made aware of? Other than what you had mentioned about the
increase
coverage.
Yeah, that's one we've been waiting on for a while. So we're excited to have that in place.
Yeah. Is there anything from the department's perspective of anything that? No. Okay. Pam, are you there?
Yes, I am, Bob.
Okay, do you have any online questions?
So we'll just let people online know if they'd like to ask a question, please raise your hand. And while we're giving them a moment, I have one question I will read for Mike Kirk. And he's asking, with some properties being non-renewed today, what is the availability of companies willing to still write needed coverages for Bald Head Island?
I would again refer you back to kind of all the similar questions where it was contact a local agent who is familiar with the local market. And we have two of them here today that I would suggest you start with. But you need a local agent who knows and understands Bald Head Island and also probably has all the markets or as many of the markets as humanly possible where there's still an availability issue here for insurance. You guys would like to add anything?
We're not even close to cashed out on available options. So we've got plenty. We're fortunate that there are much less than there used to be, but we still have plenty of options.
Yeah, I agree.
Anything else, Pam?
And that's got it. No hands raised. So I think you've answered that. Thanks, Bob.
You're quite welcome. I would personally like to thank our insurance department, our local agents for showing up with this. This is one of the best panels that I've been on since I've been here. I think there's a lot of information that we've exchanged. If you're listening in, you have two great agencies here that you should get in contact with. If you've got some of these issues, know that you have a friendly insurance department. And those are the kind of resources I think that you need to call on if you have, especially if you have any individual questions or problems. So with that, where's Christine? Would you like to say anything at the end, or then I think we're
Very well. Thank you, Pappas.
I think we're not quite finished here. What? Oh.
The handouts from State of PowerPoint will be on our website, and then the video of today.
Oh, thank you. Now, for sure, I'm not getting paid. All right. Thank you all. Enjoy the weekend. All right.